Let's have a look at the wheat business. So first off, read this disclaimer carefully. Then do your good deed of today by liking and subscribing. So here is wheat. When we look at this one, it's 4% here from the 52-week low and 35-ish% away from the highs. So we have seen a pretty big fall. So wheat is pretty interesting because it's a commodity. So this isn't like a company that will go bankrupt. You know, like the wheat as a commodity is not going to have any risk of bankruptcy. So this chart certainly shows a story of a major correction. This is the wheat ETF that is investable. We will look at this one, SETWE. That is the futures. SETWE. That gives us the futures, and that is better for analysis. But they do track each other pretty well. So here's the long-term chart here for wheat. Something that is very interesting is that we have these clearly defined time cycles. And if you look at these time cycles, right, these are very long-term, even going back here to the 70s. Rise, decline, rise, decline, rise, decline. You see here, rise and the decline, rise and the decline. So the low end of the current time cycle, it's late this year. No, it's late next year, so 2024. So there might be more in this pullback. So that is like a risk. There is the risk that this isn't the low yet. If you look at if you saw some of the previous time cycles, we did see a full retracement of the previous rise. The different in this case is that we do have, a major geopolitical conflict, which affects one of the key grain producers, and that it could mean that maybe the retracement we have seen, where this rally has almost completely been retraced, that there might be a rising phase on the horizon, but definitely still to be determined. If you look here at the dailies, we do see some. This certainly looks like a very mature cycle. Major rise and the decline. So there are some smaller cycles within the major time cycles. If you look here at RSI and the PPOs, we are emerging from a pretty low level. Looking at the dailies, accumulation distribution is still pretty weak. So there's not like a whole lot of strength here. So the primary sort of take we have here is that we do have a commodity at a support level after a pretty substantial decline. So if we draw some horizontal lines here, so let me get this tool, like that, you do see that, okay, we have support here, and also here. So this is definitely a point of interest. You also have some action back here as well. So from a more long-term perspective, I do think that this is a pretty interesting place for the wheat futures. So in my notes, I would say that we have time cycle, but this is very like long-term. I might put I here for year. So this is like a very big time cycle. But we do have small. Yeah, so we have almost seen a complete retracement of the previous rally. So retracement completion, like a question mark. I think I will give the bulls. Let me give them a 4 on this one. I think it's overall it's pretty interesting. But it's not like a roaring setup yet. So here is the seasonality for wheat. There is a tendency for there to be some strength into later in November, but then some great weakness. Here is the seasonality for November. So November, it's overall looking at the sum, it usually is a bullish month, but it's obviously pretty mixed, and that's something you see across the various months here. Quite a few of them are mixed, December as well, but recently we have seen more bullishness from December. So taking the seasonality into account, I think I would, in this case, give I give a bit of a bear on the seasonality, but just a small one. And where I think wheat gets more interesting is when it comes to the fundamentals. So I do use another tool to look at commodities. I cannot share that tool online, but that basically imputes 6 here on the fundamentals. So pretty bullish. Wheat is currently very much undervalued. And as I said in the beginning, wheat it's a commodity, so this isn't something that will like go to zero. So when it comes to wheat, let me just also get DBA like that. So going into the futures, it's a bit of it's a different animal, not recommended for beginners. So you can instead buy the WEAT. That is the Tecurium Wheat Fund ETV. It is pretty cheap, easy to get exposure to. So $5.78. So not like a huge commitment. And it's an interesting place to sort of get a more rounded out portfolio, getting some exposure to commodities. We do see that long term there is a minus 5% correlation with S&P 500. So basically there is no long-term correlation. That's interesting. 99% with wheat futures, so very strongly tracking the commodity. 48% correlation with the agriculture ETF, DBA. Short term, 8% negative correlation with S&P 500. 98% positive with the futures. So that is very strong, minimal tracking errors. And then you have minus 30% with the DBA. So here you can see the wheat ETV, and this one is at some key horizontal support. So you see that there's some interesting developments here for this commodity. So given that this is a commodity, it doesn't make a whole lot of sense to sort of look at a bunch of other stuff. In this case, wheat is a bit of it's a different thing altogether. If I looked at like a stock, a semiconductor stock, then it would make a lot of sense to compare it against the industry. In this case, yeah, there are other grains, of course, but there's not that many grains out there. And they do have different use cases. So sort of wheat, it has its own thing happening. So let me just compare the future against the ETV. Like that. Now weeklies. So in this case, we do see that there's been some consolidation between this pair. RSI is completely in the neutral zone. Dailies, we do see that the futures, so in this case, the futures has risen against the ETF, but it has risen to a point where we have previously seen some reversals where the ETF outperforms the future. When we look here at the seasonality, you see that the future for November, it has a pretty clear tendency to outperform the ETF. For December, it's more mixed. January, you do have some clear outperformance. So for relative performance, I do think I will give the bulls. I give them. What will I give them? So overall, I do think it becomes a one bull. So when looking at the technicals, there were some suggestion that maybe the futures would start to underperform the ETF, but then you look at the seasonality, which suggests the opposite. So it was a bit of a mixed bag. We do end up with 2.5 in favor of the bulls. We do have this major new bullish time cycle on the horizon. That is a very long-term time cycle that we saw on the futures. When it comes to the more shorter term, the recent rising phase has almost been completely retraced. Historically, that usually is a sign that a new rising phase can begin. So the WEAT futures, it's currently at a very low level along with the ETF. The easiest way to get exposure to WEAT in this case would be with the ETF. It is very, very cheap. So you can very easily get exposure now to like a very historical commodity. And you also have the geopolitical context that could lead to an increased demand for this grain. And beyond that, you also have the very interesting correlation with S&P 500, which was overall it was negative, but it was weak. So if you have wheat and you also have the S&P in your portfolio, then you do have a pretty minimal correlation. So overall, very interesting times. By the way, here is the WEAT futures correlation with S&P 500 long term, and it is literally at like 0. There is literally no correlation at the moment. Short term, we do have 1%. So basically, short and long term, no correlation. So thanks for watching and have a great week ahead.